Ladies and gentlemen, the much anticipated August recap is here, and we have got a lot to talk about. I don't think this should be super, super long, but there's a lot to talk about. So, to recap the month of August, 23 trades, we lost $742.38. We had a 19% win rate, and we had a 1.46 average win-loss. Now, a couple things to dive into right off the bat. I'll pop off so you can kind of see the by day, green, red, all this stuff, and I'll walk you through everything here in a second. Okay. Number, not that bad. If you go back to last month, I think this actually would be just about half of, this would be about giving back about half of what I made last month, maybe a little bit more than half. Maybe 60% of what I made last month. And so in the grand scheme, if I was to oscillate between July and August, and have those P&Ls go on the entire year, oscillate back and forth, you take a step back and look at it, that's actually not bad. It's a profitable system. It's better than most people in the world anyway, because most people are losing money. So I'm like, okay, take a step back. Not bad. Not bad. Better than the majority of people who try. However, not great, because we would like the number to be green, and there were some things we could have done to potentially make it less red. I'll get to the progression. I'm going to walk through a timeline of the month in a second, and then after that, we'll dive into the data, the deeper data, through what I tracked, because I tag everything, time frames, what time frame I traded on, the setup I traded on. I'll go through all that. But I want to talk about the win rate and the average win-loss first. And it comes out to be 19.05. Okay? Realistically, there were 2 trades that I won during this month. The rest, I would say, or the other 2 winners that it does go down in the book as a winner, I would more so say that they are break-evens. And there was a couple red trades this month that I would also say are probably break-evens, because it logged it as a slight loss, but it's about a break-even trade. So if we were to do the math realistically, I had 2 winners, I had about 6 break-even trades, and I had about 15 losing trades. That would be what the stats would tell you. That's what the stats should be, to be a little more accurate if you're being perfect. But in the grand scheme, it's not the big deal. Look at the bigger picture, it's not that big of a deal. It's a couple of trades. It'll all even out. So that 19% is actually a little generous. It was actually worse than that. And to finish things off, I will not be making an individual recap on these 2 trades, because I just don't think that it's worth it. One of them was a trade on the Dow that I wouldn't say accidentally, I was forced out of. It forced the close on this trade, because the prop firm Arctic Funding, that I will mention, and I will name drop them, they had an error with their system. I don't know, a bug, a glitch. I don't know what the hell fucking happened, but it closed me out of the trade at like 6 p.m. I was like, I didn't think you can trade at 6 p.m. Interesting. Closed me out of the trade at 6 p.m. And then it said that I had lost $22,000. And I was like, what? So there was some massive glitch going on. They fixed that. They reinstated the accounts. They've adjusted it, I think. But in that situation happening, TradeZella got the data from them and was like, oh, we closed this trade out. Boom. And the realized P&L, or the net P&L, or whatever happened, I don't know what happened. Either way, it closed it out. I was up $43.68. Okay. Did the trade really do much? Not really. It was kind of a low momentum trade, so I kind of want to just say it's break even, but it technically was. It goes down as a winner, and it was a small winner. And then the next trade here was on gold, which I did close this one myself. This is myself. This is me. This trade, because gold just didn't do. Gold hasn't done shit in 2 weeks. I talked about this on the live stream. Gold has not done anything in the past 2 weeks, so I closed it out, and I was like, let's just clean shop going into next week, and then we can reconsider everything next week. And that was kind of my approach. So that's where we currently sit. And those 2 trades being like small green trades that I would more so consider break-even trades, they technically eat away at what the average win-loss comes in at. Still a positive number here, above 1, but realistically, if I had a lot more winners, this number would be higher based off the data that I've got. But even that, it's not a bad number. The combination of this and this is not great. But if this was like a 2% or a 2.0, and this is, closer to 40, 50%, you have really, really profitable system. So that's the deal there. Hopefully that makes sense. Now, let's talk about this progression here. So first 2 days of the month, Thursday, the 1st, I just don't think there was any trades. I was sitting here. I don't think there was any trades. I didn't see anything I liked, so I didn't trade. Friday, we lost $322. There was 2 trades on the S&P. They were not bad bets. The problem was that I probably didn't need to trade them. And so I did technically, I was busy. It was a day where I had shit going on. I was packing up. I was literally leaving at like 12 o'clock, driving to South Carolina. And at the time, I was like, okay, like, did I need to trade that in the morning? No, I had like an hour and a half of time that I was at my desk that I was like kind of packing, kind of watching charts. And I probably wasn't in the best like space to trade in the first place. The next week after that, I was in Montana. So we flew to Washington, drove to Glacier National Park, hit up Glacier Tuesday, or I think hit up Glacier on Wednesday and Thursday, and then drove. My brother was up in Montana. We were driving him back to Georgia, and then he went to Florida. So whole thing, that began Friday, Saturday, Sunday, came back home, pretty much was back in action at the desk Monday, and then this is the month. The bulk of the month was in here when I was more centered. I had no distractions, and we were kind of just doing what we're doing. So if you take away, not that I'm taking anything away, but if I was being real with myself, this Friday, like, yo, dude, like, you don't, like, there are some days where, like, this Friday was kind of like almost like I'm addicted. It's kind of how I felt. Like, oh, I could do something, so I'm gonna. Whereas the day before, for whatever reason, I just didn't see setups, and so I was fine not trading. But Friday, it's like I have shit going on. I'm driving. Like, why did I feel the need to force 2 trades? And they were not bad setups necessarily, but they just didn't need to be. I just had shit going on, and looking at that was a thing where it's like, hey, you got shit going on. You're trying to get good at a skill to where you could be good at the skill and then do other things in your life that you want to do on your own terms. Like, why are you letting the thing that you're trying to use as your vehicle of getting away from the things that tie you down necessarily, I guess, the work that ties you down potentially? Why are you letting that thing that you're using as like almost your escape, why are you letting that, or why are you getting tied to that, and why is it pulling you back in? Why is it almost holding you back? And that was like my relationship there with the charts probably wasn't the healthiest, or it still isn't the best. No one's perfect, but that was an example right there. I think that we can learn from. Didn't trade this whole week. Could have technically on my phone, but I did not. Didn't look at the markets at all. I looked at the markets, but I'll be honest, but I didn't like have any thought to trade. And then after that was kind of just, run of the mill, next 3 weeks. Although it wasn't really anything run of the mill, because what we ended up finding was that the strategy was just like, literally, it was just not working. I don't know how else to say it. Like, it wasn't working. So what I had done, I have done essentially the same exact things that I've done the past 16 months this month. And it just so happened that we had a terrible win rate. But when you look at the sample size over the course of 23 trades, when I've tracked, journaled, and logged over 1,000 trades, it's not that big. So while we could get discouraging, it's not a huge sample size. And all considered, being down $742 is not, in my view, that bad for how bad this month felt. Secondarily, August has not been the best month historically for me. I think it's like there's a clear correlation to either me, how I trade, how I view the markets. There's less momentum in the month of August, I have found. This year, last year, the year before that, the year before that, the year before that. I have just found this to be the more challenging month. And so knowing that, I'm more likely to plan things for the month of August. Hence why I had this whole week kind of booked off, right? Next year, the plan will be, if there are things you want to do, trips you want to go on, friends you want to visit, maybe August would be a time to do it, just so that I kind of can schedule that in on the time where I'm historically not the best. That's just a good idea, in my view. So, with that all aside, let's now get into the data, the fun stuff. So we pull up the reports, and I am blinded immediately. But when we look at this, let me pop myself off the screen so you can see the full stuff. All these numbers, nothing crazy. Okay, cool. Largest profit was still bigger than the largest loss, which is good. At least good to see that. Nothing insane in here that like sparks my attention immediately. Max consecutive losses 7. We did have a 7 in a row losing streak, and our best winning streak so far this month was 3. All time, I believe my biggest losing streak is 9, and I want to say my biggest winning streak is either 10 or 12. That's all time. If we jump down to the days of this month, Thursdays, for whatever reason, we were feeling good. We were making money on Thursdays, and Fridays were the biggest, L. But that also stems from the first Friday of the month where we had that bigger issue. Not that it was that big of a deal, but let's go off and let's go take a peek at the instruments we traded this month. RTX was a swing trade. That made us the most money. Tesla, well, actually, RTX I traded twice. I lost on the first shot, and then I made money on the second shot. And then Tesla, which I technically could have stayed in, but either way, whatever. Tesla, we made some money on, traded at the most, and then the Dow, and then gold. But these are just because we only had a couple winners. IWM did not do me too well. Let's see if that was the biggest L. No, the S&P. The S&P lost me the most money than Amazon, then IWM, then Netflix. So S&P, I took a couple of shots on that this month, 4 shots on that one, and just lost every single time, which is kind of funny, but not that bad. And in the grand scheme, the average loss is just over $100, which is nice for risk management because I tend to make much more than that on winners. So that's good to see. All right, let's get to the good stuff. Setups, bear flag, bull flag. Now, the market was kind of choppy. It was up. It was down early. Then it was up. And then it was choppy. So, bull flags, I traded more of them. They made me money. Net bear flags did not. Failed breakdowns and failed breakouts. I don't have a ton of data on these. So, I will trade them when I see them when they make sense here and there to build the data up. And then we'll have to reconsider them at the end of the year, I think is a better way to look at these guys. So mostly it's bull and bear flag trades and breakouts versus breakdowns in bigger picture uptrends or downtrends. And the bull flag did the best, clearly. But also we traded at the most. Market was generally going up, so I have more of those shots. However, we had the consolidations. We had some red days in there, and that's when I took the red trades or I took the downside trades, and they just didn't pan out. Again, same thing. It's been the same story this entire year. The bear flag has not done well on average. Individual trades could work, but the overall thing is that it's not, because we are in a bigger picture uptrend in the market. So that's why we take a look at the bigger picture trends. Now, do I know that for sure? Not necessarily. I would need to have a more sustained bear market and then be able to go back and forth, pin the data, bear versus bull, these trends versus so it's not perfect. But if you were to go back to October of last year, market was very, very red. I had a very, very good month. So, and I played a lot of bear flags. So I don't want to say that the bull flag, I'm only a long person. No, I think it's a product of the market and the conditions that we are in personally. That's just what I'm seeing. Chasing trades, over trading, and revenge trading, that was kind of the biggest things here. Nothing crazy though on these, but that was like the things I tagged as my mistakes. So chasing some stuff, getting in a little bit late, doing too much, and then trying to make it back, which are things I don't think you ever necessarily lose. They always will come back and creep up on you, but understanding them and logging them, I think, is important. All right, custom tags. Here's where it gets fun. 5-minute time frame. We took 15 trades. These are day trades, and they lost me $645. The 1-day time frame, I took 3 trades on the daily time frame, made me $180 total. These are swing trades. That 1 hour time frame, not very many trades there. 4 hour time frame, just 3 there. There's not a ton of data on that. I mostly trade off the 5-minute and the 1 day. Mostly the 5-minute and the 1 day. We go back and forth because if you were to go back the past couple months, I believe the 5-minute chart was doing really well. And so I was like, I would love to have the data tell me that the 1-day chart is by far and away my time frame. And it still is good. It's profitable this year for sure. But my thoughts are, why am I thinking that? It's because it swings. I just like swings. That's all. I just like swings. That's simple as that. It's more fun to be able to sit back and be in a trade and be just chilling and not have to sit there and sweaty palms. Not that the 5-minute chart necessarily gives me sweaty palms, but just letting them do their thing on the bigger time frames, and that's it. Swinging it, letting it hang and swing. Okay, so that's the thing. So now let's get into some of the bigger takeaways and the plans for next month, all that stuff. A couple things that I did. First things first, I probably should have mentioned this earlier. This was on a $10,000 and a $25,000 prop firm account. The $10,000 account is from Arctic Funding, and the $25,000 account is from One of One Funding. I don't give a fuck if, why are you using those firms? The reason why I'm using those firms is because they are new, they offered 100% payouts, and they offered stocks. That's why I use them. Find me a prop firm out there that's going to offer all those things and be more reliable. There aren't really many out there. So these guys are new. So how much can you go back? I don't know how reliable they realistically are. Have I had my problems? Yes. Will I talk about them? Absolutely. And we'll go from there. We have yet to reach the tipping point for me to say, fuck these guys completely, and I'm going to just build my own accounts back up again. The reason why I'm doing this all is because I have been trying to throw down as much money as I possibly can on my student loans to pay those off. Once those are fully paid off, then I will be building my own accounts back up to then trade with my own money. But in the meantime, I'm like, hey, I could trade with other people's money, get funded, and potentially make, money if I have a higher level account, and not risk my own capital, and then use my own capital to pay off my student loans now, so that in 2 years, I'm going to be like debt-free, stacking cash. I feel like that's a pretty good idea, because my other plan was to pay the student loans off for 15 years. If I pay the minimum payments, I pay them for 15 years. It's like a 6.5% interest rate, 15-year loan plan. I'm like, I don't want to be paying my student loans for 15 years. By the time I hit 30 years old, if I still have student loans, okay, I did something wrong. That's how I kind of think about it. So, that's the situation. That's the reasoning why. But I purchased for $250, about $260, a $25,000 account with Arctic Funding. I am funded on a $10,000 account. So I have a funded $10,000 account. I purchased a $25,000 account to connect the trade copier and to do like a final true test with the trade copier. And I haven't copied any trades yet, but going forward, every trade on the $10,000 account will be traded 2.5x on the 25K account, which will have to go through phase 1 and phase 2 and then get funded on that. So if we make money on the 10K, we'll pull some out, and great. That's a few $100 maybe here and there that we can pull out. Cool. It's just, whatever. It's extra cash. We'll be doing the copier on the 25K. And then as time goes on, if I make enough money on the 10K account to pull out enough to pay for about $1,000, a little over $1,000 to pay for the $200,000 account, I will pull the money out, buy the $200,000 account. If the copier is still working, I will then have the trade copier being like the master copy off the $10,000 account, 2.5x on the 25K, and then 20x on the 200K account. So all those trades will be rolling through, right? They're the same thing, just be multiplied per the proper account sizing. So in the coming months, as time goes on in the coming months, the plan is to scale it up. And I'm not going to waste around and try to fuck around with the 25K and then the 50K. The way I trade, it takes a while. I've never lost an account. I've never breached an account. The way I do it, because of how I manage my risk, I do it, in my view, like the right way, the slow and steady way. And so I would rather skip all the middle and go to the biggest account that they have. And if I trade the same slow and steady way, it will be sustainable, and now the dollars make a lot of difference. They make a lot of sense. On the other account that I have, the $25,000 account with One of One Funding, we almost passed phase 1, and then I got hit with a $400 bullshit fee because I traded some fucking crypto that I shouldn't have traded, which is on me. And the fee was not like hidden; it was there. It was bullshit, but technically in the fine print, it was there. I got hit with that fee, and then had a losing streak, so then I fell back off. I was over the threshold to pass phase 1. If at one point. If I had closed out of all my open positions, I decided to not do that. And I was like, I want to let the trades just go to their targets and stops. And that was it. Those trades reversed on me, hit some stops. We had the massive fee. So we kind of fucked ourselves there. Although we're still close. We're a couple trades away, realistically, from passing that account. But that's the deal there. That account, my plan is we have a $25,000 account now. If I pass, the trade copier is ready to go. We will connect the trade copier and we'll buy a $200,000 account with them once I make enough money on the $25,000 account to pay myself to then purchase the $200K account. That is the plan. That's a progression. So we're going to see how it goes. But if we do start to see, or if you see the sizing kind of like incrementally go higher, that is because on any stock trades that I make, we are trading on a $10,000 and a $25,000 account together. So it's technically trading $35,000, which means we're going to be 3.5xing my current sizing approximately. Does that make sense? Am I doing the math right? I don't know. I think that's it. So if on average I risked $100, let's say I risked $80 on a trade, I guess let's make it 100 to make it easier because I can't do math. If I risked 100 on a trade and I lost, I would now lose $350 on that trade, but it's the same net effect on the size of the accounts. And if I was to make $200 on a winner, fuck, I'm going to get myself in trouble here with the math. $200 times 3.5. Why can't I think about that? I don't know. Is it $750? I think $200 times 3.5 is $700. Yes, I was right. So that could right there be a decent, bump. So we are kind of sizing up. Now, why are you doing that a red month? Actually, the thought is twofold. This is the time, in my opinion, to do that because I've been on such a bad streak, or not. I've been on a streak that it's normal. Like if you go back to the data, it's fairly normal. I go through these runs. Go to year to date. We've gone through these runs. Like we've had these periods of time where we kind of like, they don't tend to last for 3, 4, 5 months. It could, but they don't tend to last that long. The markets tend to oscillate, every so often. And so my thought is, if you were trying to scale up, this wouldn't be a bad time to scale up. Not that I'm really scaling up, but I'm going to use this as a true final test because I haven't tested this trade copier long enough. I've had bits and pieces, but true final test to see how the copier works. As long as that looks good to go, then the $200,000 account is my next. It's in my sights next once we make enough money, hopefully. So that's the plan. Going forward into September, are we going to worry about these numbers? No, it's a new month, fresh start. We're looking at cleaning things up and trading the same way, baby. Trading the same strategy, doing the same things. But what I will say is this: I'm going to try to do a better job of letting the gut guide me more, because what I mean by that is certain situations and certain trades, you can kind of get a sense, okay, this is going to take a little bit longer. So manipulating that sizing a little bit, not being so firm in, oh my God, every trade has to be the exact same risk and reward profile, meaning like, oh, I have to risk $100 to make $150 and that's it. No, I'm going to be a little bit more open to these different setups and different charts and different things that I see in different stocks. That if I know a stock, if I haven't traded a stock as much, I might not trade it with the same size that I would trade a stock that I've traded a lot, that I've got a history on, that I know I do very well on because the system has worked on it for the past 16 months or whatever. So does that mean risking $100 on this trade, then risking 60 over here, then risking 20? No, it's not going to be that wide. It's going to be like, okay, some of them I might risk 60 to 80, and some I might risk 70 to 90, somewhere in those ballparks. Nothing crazy. It's not going to be like wide-ranging risks, random shit. No, it's the same shit, doing the same thing, but allowing myself to be a little more not say subjective, but there's a subjective side of trading, but have a little more discretion, I think is the better terminology. Have a little bit more control behind it, because like as you go through, you start to see things. And one of those things for the month of August is like, hey, I've seen myself in August enough to know if we don't see XYZ, probably should not trade. And if we do, smaller size is kind of the deal. And then other months, it's different. So that's the thought process. But again, the strategy, the plan, all that stuff is essentially the same thing. There's no changes there. I don't really care. I want to just trade the same way, master the momentum strategy that I trade, master that to the best of my ability, and trade that at the best of my ability. That's the deal. So if you're still here, you're insane. You're awesome. This is TradeZilla. I will link them below like always. I love them. I just paid them $400 this month to renew my subscription about 10 days ago. So they're awesome. I pay for them. If you use my link, I get a little bit of a commission, which is awesome for me. And you can save 10% with the TC10, I believe, discount code. Either way, discount code is down below, so you can confirm that. And I will see you in the next one. Here's to an amazing September. Let's fucking go.